Welcome back to the Junius Maltby channel. We're going to get right into a story that we have covered on this channel over the last couple of years. We've been following it. I try to report on it whenever there's breaking news or a new development. And as with anything in politics or global economics, the wheels of government turn slow, and apparently ships that cross the Atlantic travel very, very, very slow. I didn't even have to slow that down. That's my slow-mo voice. Get out of here, kitty. The story, Germany repatriating gold, I should say. Take a look at some of these headlines that are circulating over the last 24 hours. Germany completes return of 300 tons of reserve gold from U.S. Germany completes return of 300 tons of reserve gold from the U.S. Germany brings its gold stash home sooner than planned. Again, Germany brings its gold stash home sooner than planned. We'll get right into reading some of the highlights of these articles. Berlin, Germany has completed an effort to bring home 300 metric tons, 330.7 tons, of gold stashed in the United States, part of a plan to repatriate gold bars kept abroad during the Cold War. The German central bank said it brought 111 tons of gold back from the Federal Reserve in New York last year, concluding in September. The last of 300 tons slated for return. The transfers were carried out without any disruptions or irregularities, said Karl Ludwig Thiel, board member of the central bank, called Bundesbank. The bank also repatriated 105 tons of gold from Paris last year. In 2013, it launched the transfer to Frankfurt of 300 tons of gold from New York and 374 tons from Paris. Here we read, once the transfers are completed, Frankfurt will hold half of Germany's 3,378 tons of reserve gold, with the rest in New York and London. Thiel said there won't be any further transfers, and Donald Trump's presidency didn't change the situation. We have a trusting relationship with the Fed, he said. Well, I'm glad somebody trusts them. It is quite coincidental because the year that this news broke is actually the year this channel was founded and we started making these videos together, and that's when I first broke the story. So we've been following it, all of you out there and myself, ever since the Junius Maltby channel came into existence. As of December 31st, there were 1,236 tons of German gold in New York, 36.6% of the total. The Bank of England in London held 432 tons, or 12.8%. During the Cold War, West Germany kept most of its gold abroad, for fear it could fall into the hands of the Soviet Union if the country were invaded. Another reason was to have the precious metal close to foreign currency markets in London, Paris, and New York, where gold is traded. The Bundesbank already brought about 850 tons of gold home from London between 1998 and 2001. It has said that since France, like Germany, long since switched to using the euro, storing gold for foreign currency swaps in Paris is no longer necessary. It hasn't given details of how it transported the gold home. The original plan was for the transfers to be completed by 2020, but the bank beat its schedule. Now we're going to discuss why they might have moved it up just a tad. Here's an example of some German gold bars. These are, I believe, the exact bars that were moved here in this photograph from the AP Newswires. An interesting comment in this Reuters article, you'll read here, it said, on Thursday, as confidence in the euro ebbs, even in the heart of the currency bloc after a decade of a sluggish economy. Stashed away at the height of the Cold War in safe havens well out of Moscow's reach, the 3,378-ton, 120 billion euro gold stockpile has become a symbol of Germany's economic ascent and a guardian of its stability. But with Europe stumbling from crisis to crisis, the German public has grown uneasy about keeping the gold abroad. Some even argue the world's second biggest bullion reserve may be needed to back a new Deutschmark should the Eurozone break up. I believe it might be worth reading that line one more time. But with Europe stumbling from crisis to crisis, the German public has grown uneasy about keeping the gold abroad. Some even argue the world's second biggest bullion reserve may be needed to back a new Deutschmark should the Eurozone break up. Having already moved 583 tons of gold out of New York and Paris, the Bundesbank plans to have half its gold in Frankfurt by the end of 2017, years ahead of its 2020 schedule, with the rest split between the Federal Reserve Bank of New York and the Bank of England. We have a lot of discussions about U.S. President Donald Trump regarding implications on monetary policy, macroeconomics, etc., but we trust the Central Bank of the United States, Bundesbank board member Karl Ludwig Thiel told the news conference. Trump has not triggered a discussion about the storage facility in New York, he said. With French presidential candidate Marine Le Pen and Italy's Five Star Movement openly campaigning to pull their nations out of the euro, confidence in the common currency appears to be waning. Opponents argue that the rigidities of the currency union force them from austerity to austerity, keeping unemployment high, wages low, and competitiveness weak, perpetuating economic malaise that actually drives countries apart and failing the key goal of the euro. Thrifty Germans working to repay debt taken out at the height of the crisis, meanwhile, feel they are forced to bankroll many of Europe's weakest economies, a source of animosity. Still, the Bundesbank is content to keep just half of the gold at home and has no plans to relocate even more of the reserves, Thiel said. Thiel added that Britain's plans to leave the EU have had no effect on the plans, since London remains a key gold trading market and a safe place for storage. Moved in part via Switzerland, the relocation has so far cost 6.9 million euros. Hoping to soothe the public and ease speculation that some of the gold might not even be there, the Bundesbank released a 2,300-page list of gold bars in 2015, promising increased transparency to calm wary Germans. During the Cold War, 98% of Germany's gold was stored abroad, with the biggest chunk moved so far, some 931 tons, brought back from the Bank of England in 2000. Once the relocation is completed, the Bundesbank will keep 1,236 tons in New York, 432 tons in London, and the rest in Frankfurt. The current move involves 300 tons from New York and 374 tons from Paris. So there you go, ladies and gentlemen. Pretty big story. I don't believe it's over at this point. I think there's still more to it and more that will unfold. As the world economy, I guess you could say, unravels in the future, there will be bickering and scrabbling over the repatriation of gold and further gold movements. We have seen this, again, we've covered this story in the past. We've been talking about it for 4 years now. And as many of you are aware, there are multiple countries that have repatriated gold and brought gold out of other nations, repatriating gold, bringing home gold that was stored in other nations' vaults. The part of these articles and this story that really intrigues me is the foresight to bring this gold home as the predictions for the euro breakup become more and more commonplace. The orders for the repatriation of this gold also predated the Brexit itself. I believe there were people in Germany in high places of power that had their finger on the pulse and were predicting economic events that we have yet to see. What is also interesting is that this was done ahead of schedule. These shipments were not to be completed until 2020, and yet here we are in 2017, 3 years early, with the shipments being completed. One has to ask what the sudden hurry or increased pace for the gold movements may have been. Could it be the timing and the predictions of what is coming with the European Union? Story number 2 was actually mentioned to me by one of the subscribers and viewers here on the channel and sent to me in a private message. Global investing hotspots. China January forex reserves fall more than expected to 2.998 trillion, near 6-year low. It's under the 3 trillion mark, which apparently is a key level. China's foreign exchange reserves unexpectedly fell below the closely watched $3 trillion level in January for the first time in nearly 6 years, even as authorities tried to curb outflows by tightening capital controls. Reserves fell by $12.3 billion in January to $2.998 trillion. compared with a drop of 41 billion in December. Economists polled by Reuters had forecast forex reserves would fall by about 10.5 billion to 3 trillion. And then at the very end of the article, there's an interesting mention of gold. It says China's gold reserves rose to 71.292 billion at the end of January from 67.878 billion at end December. Data published on the People's Bank of China website showed. So interesting developments and movements of foreign currency exchange and gold accumulation taking place in China. It truly is interesting what's taking place in the world economy as money and gold seems to move and flow. And of course, we cannot look at these articles without reminding ourselves and using it as evidence to the skeptics and those that are anti-gold as to the value that gold plays in the world economy and how it truly represents real money. For if the skeptics were correct that gold was truly of no value, there is no way Germany would have paid close to $7 billion to repatriate just some of their gold. There would be no reason for the gold to be held in vaults, for strategies and plans to be in place where nations plan years and decades in advance to defend themselves against economic crisis. And some of that planning involves the movement and shipping and the repatriation of gold. Thank you for joining us today on this news broadcast and being part of the Junius Maltby channel. Please take a moment to smash the thumbs up button, like, share, subscribe, pop a comment down below, and if you're not yet receiving notifications, next to the subscribe button, please click the little bell so that you can be notified of live broadcasts and take part in the live conversations that we've now begun to do here on the Junius Maltby channel. Thank you all for joining.